Bill Gates, obviously everyone knows this guy, is the one who founded the biggest company in the world, Microsoft. But the thing about Bill Gates, he's just not a smart entrepreneur. He's a very smart investor as well. You see, back in the year 2000, we had the massive tech bubble crash. Microsoft stock got crushed and fell 60%. But Bill Gates, he was smart. He sold out most of his Microsoft stock and he diversified his portfolio, protecting his net worth. You see, some people are saying we are in a similar situation today. Like that 2000 market crash, they're saying we are in a bubble. So what I want to do in this video is see how Bill Gates is protecting himself today. What stocks does he own to prepare himself for his investment future? So the biggest portion by far of Bill Gates' portfolio is Berkshire Hathaway. Anyone who follows the stock market will know that Berkshire is the investing company founded and run by the great Warren Buffett. This makes up over half of Bill Gates' portfolio. Now I just want to give some credit to another great investor, Michael Larson. He's the person who manages most of the Bill Gates fortune, and I assume most of these stocks picks were his. But I have a feeling Berkshire might have been Gates' great idea. You know, since Warren Buffett and himself are such good friends, and obviously he knows the genius behind Warren Buffett as well. So basically what books should do is they own a bunch of businesses and stocks, but they don't just own any businesses or any stocks. They own ones directly chosen by Warren Buffett, because Warren Buffett is the head investor over the Berkshire Hathaway. So some examples of the quality businesses that they own outright 100% included the likes of Gecko, See's Candy, Duracell, pretty big name companies that Warren Buffett owns fully. But then you look at the stocks that Berkshire has, it's just a big list of good quality companies. You've got the likes of Coca-Cola, great dividend stock, you've got Apple India, you've got Bank of America, Wells Fargo, Delta, and Southwest Airlines. It's a beautiful list of stocks that Berkshire have. Here's a significant stake of, and Bill Gates, the thing is, he knows this. He knows how well diverse Berkshire is in good quality stocks. So this way, when he invests in Berkshire straight away, he becomes an owner in all of these good quality companies. Very smart move by Bill Gates having a significant chunk of portfolio in the greatest investing company in the world. Let's just say it's hard to go wrong. Again, I love this move by Bill Gates or Larson, whoever made this decision, to have a 10% chunk of the portfolio in waste management. It's a very smart move. Bill Gates owns 18.6 million shares in waste management worth a total of $2.1 billion. Now I'm gonna tell you why it's such a smart move. But first, let's get into what waste management actually is. Waste management is a provider of waste management environmental services. What does this mean? It means they provide transfer stations to collect waste, landfills to deposit the waste, and the fun fact is they provide services to 21 million customers in the USA and Canada. But simply, the company is based around managing waste to a ton of people. Now, why do I think this is a smart move from Bill Gates' portfolio? Well, a lot of people have been talking about the market crash coming up. Whether you think it will happen or not, waste management is not a best doctor in any market condition. Because you see, even if the stock market crashes, the economy crashes, people will still need their waste taken care of. Waste management will still be able to make money, no matter what market conditions. As you can see, the dividend of $2 per share is fairly reliable and has been increasing for over 15 years now because they have such a strong business model. And this is one way I prepare my own portfolio for potential crash by owning dividend stocks with strong business models and strong balance sheets. Canadian National Railway. A very interesting choice to have $1.58 billion of your portfolio, and it makes up a percent of the total portfolio with 17.1 million shares owned in C&R stock. So the stock is Canada's largest railway in terms of both revenue and physical size of its railway network. It has 20 points per route miles of track going from Nova Scotia to British Columbia. But the question must now turn to, why does Bill Gates own the stock? Two words: competitive advantage. Railroad companies are a business model that is ridiculously hard for competitors to come in and compete against. Because you have to build up a whole system, a whole railroad network, just to come in and compete. This makes the business model of C&R very safe. The money that they make is not likely to get eroded into in the future from other competitors. And this is why C&R has been increasingly dividend since 1995, and it's grown at a compound rate of 15% per year. The dividend payout ratio is only 35%, so technically they can increase the dividends by a lot more. Okay, there's a certain pattern that you might be noticing when it comes to Bill Gates' portfolio, and you should continue to note this pattern as we go through Bill Gates' portfolio. The pattern is that Bill Gates loves dividend stocks, and Caterpillar is no difference. It has been paying a dividend since 1933, and it's been raising its dividend for more than 20 years in a row. Caterpillar is obviously the company that manufactures and sells a whole bunch of machinery from mining equipment, to gas engines, to locomotives. I'm sure you've seen the equipment somewhere. Caterpillar, that's also a global company with more than 50% of the sales coming from outside of North America. So the revenue is very well diversified and it's generated around the world. Walmart, the largest brick-and-mortar retailer in the world. It makes up 6.5% of Gates' portfolio, and here is $1.2 billion in the stock. The stock gives him really nice exposure to the customer defensive industry. You see, in a market crash, people are still going to need to eat. They're still gonna need a shop like Walmart, and the other great thing about Walmart is they're transitioning into e-commerce. See? Yes, they obviously are mainly known as the brick-and-mortar retailer store, but they are not dumb. Customers want to be able to do things online these days. Walmart knows that they've built up a big online presence now, and they're actually the fourth biggest online retailer in the US as per this graph from Felix Richer. This is a typical Bill Gates stock. It's a global provider of water hygiene and energy, and it also provides service to food, energy, healthcare, and hospitality markets. Anyone who knows Bill Gates will know that he loves to do good in the world, and I'm not surprised. He's an owner of this company. He owns $862 million worth of Ecolab stock, which appears to be doing good in the world. The internet, a very important part of today's society. It's pretty hard to argue otherwise. Crown Castle is a company that helps provide this thing we call the internet across the USA and Puerto Rico. They have over 40,000 cell towers with 70,000 miles of fiber support in small cells. Bill Gates, he owns $700 million worth of the stock. Now the dividend that they pay is not bad at all. It's around $4.50 per share with a yield of 3.2%. But unlike most of Gates' dividend stocks, it doesn't have much of a dividend history. They only started paying one in early 2014. I personally prefer stocks that have a strong dividend history. And for all those a part of my portfolio group, they will know my stocks have consecutively increased the dividend payments for a good amount of years. My stocks need certain requirements met before I choose to buy them. Okay, so I've had to group these next two stocks together because they both are package delivery services. FedEx makes up 2.5% of the portfolio, and UPS makes up 2.4% of the portfolio. Now, UPS does not have a bit more market share than FedEx when it comes to the global markets. 19.7% compared to the 15% of FedEx. Also, UPS pays a higher dividend than FedEx as well. UPS has a yield of 3.18%, whereas FedEx has a yield of 1.75%. UPS has also raised this dividend consecutively for 9 years now. And FedEx has done it for more than 10 consecutive years. Very interesting companies to look at because let's be honest, as time goes by, we are only gonna need more packages delivered. Not Coca-Cola, but Coca-Cola FEMSA. Basically, what this company does is bottles the beverages. For those who know Coca-Cola, the company, they will know that they own hundreds of beverages brands around the world. What Coca-Cola seems to do is they bottle these beverages, which serves around 350 total customers. The stock has a dividend yield of 2.9% and accounts for 1% of Bill Gates' total portfolio. And those are the 10 stocks that make up pretty much all of Gates' portfolio. They do have some other very minute positions, but these, as say, they're very small and in total they only make up 1.7% of the portfolio. What you're gonna notice when you look at the portfolio, you'll see that it's quite defensive focused. A lot of these businesses have big competitive advantages, strong business models, and generally they pay a nice dividend as well. The strategy employed by Bill Gates has made him the second richest man in the world. The portfolio tends to do well in most market conditions because at the end of the day, if you own strong businesses, you will do well over the long term.